Welcome to RBC's Markets in Motion podcast, recorded July 22nd, 2024. I'm Lori Calvasina, Head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. 4 big things you need to know today. First, investor sentiment has gotten as extreme as it did last August and this past March. Second, earnings season is off to a solid start, but we're still looking for some additional evidence in support of the idea that we're seeing a durable leadership shift rather than a short-term trade. Third, we've been monitoring our other high-frequency indicators for clues on the rotation trade. Some suggest it's got room to run, but others aren't quite so clear. Fourth, we highlight what we're watching in the equity market regarding the U.S. election and our initial thoughts on how Biden's decision to withdraw may impact the market. If you'd like to hear more, here's another 5 minutes. Let's jump into the details, and we'll start with takeaway number 1. Sentiment has gotten as extreme on the bullish side as it did last August and this past March. As of July 18th, net bulls in the AAII survey came in at 29.4%, with the 4-week average hitting 22.2. That's a little more than 1 standard deviation above the long-term average. Net bulls were at similar levels last year in early August before the S&P fell more than 10%, as well as in February through April of this year before the index fell more than 5%. Last week's turbulence in the S&P came after some major election-related developments and a fierce repricing of the beneficiaries of Fed cuts. Cross currents are complex. It's important to remember the stock market has seemed due for a breather, and sentiment can get stuck around these levels for a little while before retreating. Moving on to takeaway number 2. Earnings are off to a solid start. We're looking for evidence that the leadership shift from large to small and growth to value is durable. On the overall strength, beat rates are strong so far on both earnings and sales. Commentary on earnings calls also suggests companies are managing through challenges, that demand conditions are stable despite more intense reaction to higher rates and inflation. Election commentary is picking up, and the pickup in capital markets activity has been a key theme. The tone around AI has also been better than what we saw at the start of last reporting season. On leadership, S&P 500 continues to no longer have an advantage over the Russell 2000 on earnings sentiment, the rate of revisions to the upside. This is very good news for the rotation trade into small caps, but we'd like to see this indicator flip fully in their favor to gain conviction that the longer-term outperformance cycle in small cap is really starting up, rather than the idea that we're just seeing another short-lived reversion trade. Megacap growth remains dominant relative to the rest of the S&P 500 on earnings revisions, meanwhile, which is an ongoing challenge for the shift into value. Next, takeaway number 3. We see some mixed signals for the rotation trade and some of our other indicators. One data point that dampens our enthusiasm on small caps right now is that the move in the Russell 2000 relative to the S&P has been similar in magnitude to the one we saw last November and December. Another dampening data point is that small caps just don't look cheap anymore, with the Russell 2000 forward PE back to average again. On the other hand, positioning in Russell 2000 futures has surged, but isn't back to its late 23, early 24 highs yet. That points to more room for the rotation to run. Flows data is also showing a shift into small value and cyclical sectors and away from growth and tech, even though overall U.S. equity flows are still strong. We'll wrap up with takeaway number 4, a few thoughts on the election and what we're watching. First off, we're watching betting markets. We're keeping a close eye on whether the relationship between the S&P 500 with Trump's perceived chances of winning will persist. Throughout 2024, there's been a positive correlation between the two if you look at the betting markets, with the S&P 500 hitting its year-to-date high as Trump hit his own 2024 high in betting markets early last week. We're watching to see if that relationship holds up. Second, we're watching flows. U.S. equity funds have been seeing consistent inflows throughout 2024, while flows to Europe have been negative. Our conversations with non-U.S. based investors since last summer have led us to believe that Trump's America First agenda has been seen as positive for the U.S. and negative for Europe by global investors. We haven't seen any change in these flow patterns of late, but we're keeping a close eye. And the third thing we're watching is policy commentary. Last week, investors debated what the implications of a second Trump administration would be for tech. A reminder that election years are a discovery process in which investors must learn, digest, and price competing policy views. It will take some time for Harris's agenda to emerge if she's indeed the nominee. Our work from 2020's primary suggests that she was seen as a little tougher on energy and financials than Biden, but like Biden, less onerous for big tech than Warren and Sanders. We suspect her views have evolved, but this seems like a good place to get the conversation started. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.